So, I'm sure with what the crypto market has been doing over the last couple of months, you're intrigued or you're wondering how to trade prolonged market consolidation. Now, in this video, we're going to be explaining in detail what market consolidations are and how you can make the most of them. My name is Prince Wonder, MD Wondafund. Now, what are market consolidations? I've always said if you understand the nature of a thing, you know what it's capable of. Now, market consolidations are simply price movements within a given support and resistance, of course, over a period of time. So the market literally just trades between a particular support and resistance over a certain period of time. That's a market consolidation. Okay, so whenever you see something like that, that's a consolidation. Now, how does it work? Okay, now it's actually quite easy to identify a consolidation. You're just going to see the market trading, uh, bouncing between a peak support, peak resistance, and a base support. So you really just want to identify those 2 points, and you rarely see that the market will break that range. Once it breaks out of it, it's going to be trending in a completely different direction. Okay, so basically, the market is just moving from support to resistance, support, and back and forth. The same support and resistance range, mind you, not random. Um, so whenever it moves from the support, it trends all the way till it gets to the resistance and then flips and then all the way back down to the support. Okay, so if the market is going to be using a base and a top, it usually uses these two ranges. So that's the key thing for you to understand about how they work. Okay, so but going in deeper now, firstly, the asset, has definable steady support and resistance levels. Like I just explained, there's always that top and then there's always that base. Okay. Secondly, now the range usually is very narrow, right? So also you have to be very careful because if you're an analyst, you realize that a lot of tokens, pairs, assets, they exhibit different behaviors. They can be volatile on different levels, right? So you don't apply one situation to another, but usually the range usually isn't all that big. Now, take Bitcoin for example. Bitcoin has been consolidating for the last for a very long time now, but based on the current consolidation, it's been more than a few weeks. So now this range is give or take 5-6%. Others over the last year have been 8, 10, 4, 5%, give or take. So depending on how the market wants to trade, it usually just ranges in its own time. Now, lastly, you should look for relatively low trading volume. Now, usually when we have high volume in the market has a lot of spikes. Okay, there are a lot of find a lot of weeks in the market because the market is trying to force its way out. So usually in a consolidation, you just want to see that steady volume, not necessarily low, but steady and definitely not high. Because if it's high, it's going to break that consolidation very quickly. Now, there are some advantages and disadvantages to consolidating markets. Okay, so we're just going to touch upon some of them. Now, advantages of a consolidating market. One, potential trend reversal. Now, prolonged consolidation can signal a potential trend reversal, providing traders with an opportunity to enter positions early before a new trend emerges. Now, following what the market is doing right now, the Bitcoin is actually consolidating as a resistance, and because of that, that's where the main issue is with the market. Since it's consolidating as a resistance, it's incredibly difficult to know if it's going to flip and come down or break the resistance and continue to go up. Hence, where the confusion is. Else, it would be if it was consolidating at a support, majority of people would just buy and wait, right? But since it's at a resistance, there's a very good chance it could break it, and so there's a lot of uncertainty. Okay, now opportunity for accumulation. Now during consolidation, savvy investors may accumulate positions at favorable prices, positioning themselves for potential profits when the price eventually breaks out of the range. Now again, this is mostly applied to a support stance. The market is consolidating at a support. Now, saying support resistance is because we have support and resistance on different time frames. Okay, now the resistance Bitcoin is consolidating at right now is on a much higher time frame, so it's significant enough for us to worry about it. Else, the consolidation range actually is just a base support and resistance, and you can just flip that. But on a much higher time frame, you also need to look from that perspective. Where is the market, and does it look bullish before you accumulate, not just see a consolidating market and jump in. Okay. Now, lastly, resting market resting period. Of course, when the market is consolidating, mean it's cooling down from a move or a trend, right? So it's just going to remain in one place while the market corrects itself mentally, volume wise, everything. The market really just corrects itself, right? Before the next price movement. Okay. Now, let's take a look at some of the disadvantages of a consolidating market. Now, as I said, uncertainty and frustration. I said the market is consolidating as a resistance, so it's incredibly difficult to tell what it's going to do next, right? So, prolonged consolidations can lead to uncertainty among traders as they struggle to identify the asset's future direction, causing frustration and indecisiveness. Now, we want to know what's going to happen next, but because it looks like it's very bearish or it's consolidating as a resistance, we don't want to enter as a resistance. So we're waiting to see if it's going to drop and give us a better entry. So we're uncertain, and it's preventing a lot of people from trading, right? Because they don't want to um, gamble it. Next, opportunity cost. Now, traders may miss out on other potential profitable trades in more trending markets while waiting for a breakout from a consolidation phase. Absolutely, absolutely. Because there are multiple ways to trade the consolidation. You could trade within the consolidation and then you can wait for a breakout of the consolidation. Now, there's no definite time frame for how long a consolidation may last. Okay, so if you're going to wait out a consolidation, you just have to wait it out. If you decide to close your position, perhaps as soon as you close your position, that's when the market is going to start to trend, and it's very frustrating, right? Now, decreased trading opportunities. Now, reduced price movements during consolidation may lead to fewer trading opportunities, especially for short-term traders who rely on volatility. I think I pitched into this just a little while ago that a lot of people are going to be trading because they feel like the market is not going to go up, so they're really just waiting for a breakout to determine what next the market is going to do rather than trade within the consolidation range. Not everybody does that. Some people just want to buy the breakouts. Okay. Choppy trading conditions. Now, prolonged consolidations can create choppy and unpredictable price action, making it challenging for traders to implement certain strategies effectively. Now, consolidations, it's much better to scalp or to trade, enter your buy positions at the base of the base support and trend all the way to the top resistance. That's the most effective trading strategy. Trade within the range. So it doesn't work for every single strategy, right? So it withholds traders from implementing the full range of some of their strategies in the market. Now, how to trade a consolidation. Over time, I've been chipping in a little bit of this, so but just um, now, it is essential to approach the market with caution as trading during prolonged consolidations can be challenging. Focus on learning technical and fundamental analysis, risk management, and controlling your emotions to navigate such market conditions effectively. Now, consider paper trading or using a demo account to practice strategies before committing real funds. Absolutely, because whenever you're trading a new market, you really want to backtest your strategy to see if it works in that market before you go in. Don't jump into the market an uncertain market condition with real funds. You want to backtest, test with a demo account, see if your strategy works perfectly or okay enough before you jump in. No matter how experienced you are, you need to keep back testing with different market conditions. So you test your strategy to see how it works out for you. All right, guys. So this is mostly what there is to know about market consolidations and how you can trade them. If you have any other points you'd like to add, you can just drop them in the comment section below this video. All right.